Hi everyone, welcome to my channel. This is a great time to be in the stock market as November has shown us. The S&P 500 went up 9%, and we haven't seen anything like this. It's the best month since 2008, and I think it's going to continue. The bears have been trying to scare us, and they've been so wrong. If you have fear of missing out, you should have fear of missing out because you have missed out in November. But I think there's plenty of legs left on this run, and I think we're going to make money going into 2024 because the wind is on our back. This time is different, I think, because the Federal Reserve learned so much from 2008 that they've already been bailing things out as they begin to break with the discount window and the bank term funding program, which has bailed banks out. They've reduced their balance sheet from around 9 trillion to it's like 7.8 trillion now or something like that. So they've been able to reduce that balance sheet in spite of already bailing the banks out for the temporary crisis. And I don't hear of banks being on the verge of going bankrupt right now. So that's a very positive thing. Jerome Powell of the Federal Reserve keeps pushing back on the idea of rate cuts. They're not even thinking about rate cuts, and he will maintain that posture for a long time because it's anti-inflationary to put a cap or try to put a cap somewhat on the stock market, which looks like it wants to run because the economy is so strong. When you look at the dot plots of the Federal Reserve, they're considering cuts of 1 or 2% in 24 and 2025. So the idea that they're going to go to zero, which some people act like that's going to happen, it would take such a severe black swan event for that to occur that I think it's unlikely. I think it's more likely they could cut it 2%, maybe 3% at the extreme. But I think the economy is so strong that it's going to keep inflationary pressures up quite a bit. And I think we can make money on bonds, and I've been making money on bonds. I'm going to share with you what bond investments I've made and which ones I'm considering, which are quite interesting right now. I'm going to tell you about my 6 investments and my 2 potential investments. The foundation of my investing right now is the triple Qs, the 100 largest companies on the NASDAQ. And that's done very well. It's made over 9% during November. And I also do the T triple Q, which is a day trading instrument. It triple leverages the triple Qs. So you get $3 for each dollar that the triple Qs goes up if you use the T triple Q. And so it's clearly a day trading instrument. It's rock and roll. And some days we start down, and that's my favorite time to invest, is when the market, when the Qs, the triple Qs are down and moving towards going up. And that's been a very successful strategy. And I will dive in at those times in the morning because I think the bears get all enthused about how this market is going down somehow. I don't know how, but somehow it's going to go down in their minds. And they short heavily early in the morning, and I'm going, yay. And when they get about 90 points to the negative, that's when I start to move, if it starts moving in the other direction. And that's been very successful so far. So the QQQ has been a successful strategy, and the T triple Q is just frosting on the cake. And as you can see from the chart, T triple Q has done over 28% in the last month. So it's made a very tasty investment cake indeed. I have over $370,000 in the triple Qs, so it's major. And the triple Qs I jump in and out of, I do about $200,000 at a time. So it's rock and roll, and it's been successful so far. My two speculative investments are NVIDIA, whose symbol is NVDA, and Super Microcomputer, whose symbol is SMCI. They both have done well in November. NVIDIA is the engine of artificial intelligence, and it's been able to charge up to $40,000 for some of its chips, whereas Super Microcomputer, they do a lot in artificial intelligence, but I think the main thing is probably their servers. They do servers that are complex enough to handle artificial intelligence. And looking at the chart, you can see that Super Microcomputer has made almost 7%, while NVIDIA has made over 10% during November. I expect them to continue to go up. They've had somewhat of a come down recently, and I expect that to turn around because I think artificial intelligence is just exploding much faster than anybody ever imagined. It would explode. We see these events at OpenAI, which is propelling Microsoft to new highs, and I think that's going to continue. I think artificial intelligence is the big wave. If you're looking for a big wave to catch, I think artificial intelligence is it, and it's going to be it for the next decade at least, and probably the next century. And Rolls-Royce, whose symbol is RYCEY, is a maker of airplane engines, and it's done very well in the month I've owned it. I bought in at about $2.99, and at the end of the month now it's $3.51. I own about $30,000 worth of it, and I've made about $5,000 on it. So this is cool. This is the way I like to see my speculative investments go. And it's above its Bollinger Bands, which some would say, well, it's overbought. But, 5 years ago, this stock was selling for $12. So it's come down so much. And I view this as a breakout. And I'm not concerned that it's above its Bollinger Bands. It's about time the stock breaks out, in my mind. I think it is time to buy some bonds. And I've bought some bonds conservatively. But I'm thinking of buying some bond funds. And it's because of the Fed's prediction of their rate cuts in 2024. I think it's time to look at different bond investments. And the three I think of are the junk bonds, which pay a high interest rates but have a shorter maturity rate. So it's actually the most conservative of the three that I'm presenting. The second one is the TLT, and that's just your 20-year bond fund. And that's, it's going to do well, but it will be affected more by interest rates. And if they ever raised interest rates, it would be absolutely decimated. The most speculative one is the TMF, and that's a triple leverage ETF on the 20-year bonds or more, and that is triple leverage, and so it's very speculative, but it's the one that benefits the most from interest rates coming down. And so I see TMF as the most speculative, TLT as the second most speculative, and seemingly and ironically, the junk bonds are probably the safest bond investment in my mind, simply because it's a fund, it's an ETF, so your risk is spread out amongst all these different bonds. And also, it pays the highest interest rates. Its trailing interest rate is like 6.83%, which is very high. and its maturity length is only a little bit over 3 years versus 20 years. The more years of maturity you have, the more the risk of interest rates going up, affecting your fund. So I see the junk bonds as the way to go for now, and I own about $90,000 worth of JNK. And as you can see from the chart, JNK, it's not done as well on share price, but it pays the highest interest rate. So monthly, I'm raking in over close to 7%, and I think it's probably above that right now. But over 7% interest, while the others pay less interest, but you stand to gain more if they lower interest rates. So they're more speculative, but I'm taking it easy with JNK. And I think I'm going to stick with the 90,000 on that. And I'm thinking about buying a small position in TMF just because it's too tempting to some degree. So looking at the chart on junk JNK, it's made about 4% in a month. For a bond fund, that's outrageous. 4% in a month is 36% in a year if it continued to do that. Of course, we don't expect it to continue to do that. TLT has made about 9% during the month of November, and TMF, the triple leveraged long-term bond ETF, has made over 28%. So it's time to buy one or maybe all of these and spread a certain amount into each one and sprinkle it and hold it for about a year. And I think I'm going to make money. And I think I just determined what my investment plan is. So I'm thinking through these things. I'm not a big bond investor. I'm just never too thrilled about them. But maybe it's time to get a little thrilled, and it's a way of hedging my bets on stocks a little bit. So these are all the investments I'm considering right now. I plan for it to be a profitable time from what I can determine from the data, what the Federal Reserve is saying, and just how the economy is reacting. Anecdotally, I see economic activity all around me. I don't see people slowing down their spending at all. The saying is, never stand between an American and a cash register, because that cash register is going to be ringing. And I think my cash register is going to be ringing because I'm going to be making bank on these investments. Thanks a lot for listening and watching. Be sure to subscribe so that you don't miss out. There should be some fear of missing out, because if you haven't been in the market during November, you have missed out. But I think you can catch some more of this rally forward, because I think it has legs to run on. Thank you.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain. I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints. Money, clout and fame, mud, disease, a plague. We all love to hate, have to play the game, have to make a name. All our insecurities are on display. This is war with the enemy, think that it was meant to be. Living in a time where disease is on every screen. I won't let them fester me, I know most are festering. Negativity is a plague for the mentally weak. No mercy, all I got is words.